And good morning to everyone that is joining us today. Today we'll be going over the Form 990 review. It'll be mainly focused on the 2019 form, as instructions just came out recently or earlier this year. And I know some of you probably already been through your 2019 Form 990, and you probably noticed some of the things that we're going to touch base on. I know some of you probably do a lot of 990s or review them or completing your own 990. So this should be more of an overview of some things that you already know. If there are any questions as we go along, feel free to ask those questions, and Abby will let me know in regards to what questions that you all have, and we'll go ahead and answer those questions as we're going through the presentation. Just a quick background of myself. Senior manager at KPMG. I'm in our development and exempt organizations practice. I've been with KPMG for a total of about 6-7 years. I actually had one particular year where I did leave the firm but came back. I currently lead our Nebraska business unit for our tax-exempt practice. I've been in this role for the past year and do a lot of work with healthcare organizations, large private foundations, as well as smaller tax-exempt organizations, just kind of working through the Form 990, but as well as providing consulting services as well to each of those organizations. So here's just the disclaimer that I have to show for every presentation that we do, just in regards to KPMG. So our agenda for today, we'll talk about the Form 990 fundamentals. We'll go through the core form of the 990, and then we'll go through the schedules. 990 fundamentals. So, as we all know, in regards to filing the Form 990, if you have to do a 990 EZ, it's organizations that's less than $200,000 in gross receipts and total assets at the end of the year that's less than $500,000. If you happen to file a 990N, typically your gross receipts are $50,000 or less. The year of the return is based on the first day of the fiscal year. So if you're a 501c3 private foundation, you must file a 990 PF, and there's no income threshold. If you're a supporting organization or a political organization, then you must file a Form 990 or a 990 EZ. Churches, religious orders, governmental entities with the 501A ruling are exempt from filing the Form 990 requirements. Other organizations may not file a Form 990N, but they are included in a group return, church-related entities. One thing to note, 990s, for a while, we were not required to actually file them electronically. Well, beginning on or after July 2nd of 2019, if you are a calendar year filer, you are not required to file the form electronically until 2020 tax year, unless you file at least 250 forms, and that would be W-2s or 1099s, and you have assets that are 10 million or more at the end of the tax year. Now, there are some exceptions to the particular rule, so we'll just touch base on this real quick in regards to that July 2nd, 2019. So if you are a fiscal year filer, and your fiscal year begin on or after that date, so let's say your fiscal year was August 1st, then you would be required to do the e-filing. Now, if you are a calendar year return or tax filer, basically what this is also saying is you're not required to file it unless, if you look at Part 5, when you're talking about how many W-2s and 1099s that you complete, if you have over 200, if you have at least 250 and 10 million or more in assets at the end of the year, then you would be required to file. Now, let's say you decided to change your name, or this is the final return, and you're shutting down that particular 990 or organization that filed that 990, then you would not be required to do the particular e-filing. So that is some of the exceptions that are noted. It's just in regards to the instructions of the Form 990. When is the 990 due? It's due the 15th day of the 5th month following your fiscal year end. Now, if it's liquidated or terminated, then the final return is due the 15th day of the 5th month after the date of termination or liquidation. You are able to now get an automatic 6-month extension. This actually came into play about 3 to 4 years ago, where before, if you were filing a 990 before and had to do extension, you used to have to do 2 3-month extensions. The IRS finally helped us out and allowed us to be just like every other tax reporting organization. in regards to just filing one particular form, and now we file that one form and get that extension granted for 6 months. Again, as I just mentioned earlier, beginning after July 2nd, you must file electronically. And here are some of the exceptions. Unless the name of your organization has changed during the filing year, the Form 990 is a short year because of accounting period change from that prior year. The Form 990 is a short year because of a termination, or the organization filed this Form 1023 or 1024 application, and that is pending. So there are your particular exceptions in regards to electronic filing. What are the penalties? So penalties are $20 per day for exempt organization having $1 million or less in gross receipts for the tax year. The max is the lesser of $10,500 or 5% of the exempt organization's gross receipts for the year, unless the reasonable cost for the delay is demonstrated. $105 per day for exempt organization having more than $1,067,000 in gross receipts. Max is $53,000. Exempt organizations failing to file electronically are required to deem to have failed to file and will be subject to penalties even if a timely paper return is filed. So it's important that if we have to electronically file, that we do electronically file unless we meet one of those exceptions. One thing to note, and this is something that came into play about 4 or 5 years ago, if you fail to file your 990 for 3 consecutive years, the IRS will automatically revoke your exemption, and then you would have to go back through that process again in regards to filing the Form 1023, working with the IRS to get everything restated. I did have an organization that actually went through this about 5 or 6 years ago. It was a very small organization. They reached out to us, and at the time that they realized that their exemption was revoked. And it was definitely a very, very long process. We basically had to go back through that Form 1023 and pretty much refile it and refile each one of those returns for those 3 years. So just so you know, make sure you file your returns. It's extremely important. Additional critical requirements. So the Form 990 series, 3 years are subject to public inspection. So remember that you always have to keep that public inspection 990 available. So if someone comes to ask for it, or if you get a request through email, you have to have it readily available to provide to the individual that is requesting it. Now, in regards to certain information, you can have certain information so far as concerning your donors under Schedule B, and you can have that page be blank, or kind of put have that page blank to where you don't have to show who your donors are. Must be signed by an authorized individual, officer, or corporate director. I did have one situation where I was working with a particular client for the first year, and what we found out was they were not having an officer or corporate director signing a return. They were just having someone sign it without having the proper authorization. So that was something that we had to work with them on. In regards to pay prepared, make sure you have the P10 is actually included, which is the pay prepared tax identification number. It's usually in the bottom right-hand corner for the P10, so you want to make sure that's in there as well. And then if you have the exemption application pending, which is you're working on your Form 1023 or 1024 and you haven't heard back yet, then you still should be filing that Form 990, even if that exemption application is pending. So now let's talk about the core form. So as we know, in regards to the core form, it includes parts 1 through 12, except for parts 1, 2, and 4, which has you check the box. You have to check the box at the top of the section if any additional information is required to be included in the Schedule O. So we'll talk about this later, but I'll give you an example. Let's say you're working on Part 6. Part 6 goes over the governance and the management and policies of the organization. If you happen to check, let's say you check line 2 that asks if you have a business or family relationship, if any of your board members have a business or family relationship within the organization, then you have to note that, but that won't be noted on that particular page. It actually goes to the Schedule O. So in that instance, you will be required to check the box for the Schedule O. Let's say we get down a little bit later, and you need to talk about a conflict of interest policy. If you check that box, you do have to explain that in the Schedule O. So just something to think about just in regards to as you're filling out the form. As we talk about Part 1 is basically just the summary of the entire core of the 990. The numbers should tie out to the details set forth in the rest of the form. So for example, if I'm looking at the revenue section of Part 1, Those numbers are basically pulling from Part 8 of the return, just in regards to your revenue and information that was inputted in that particular section. Each line in Part 1 refers to another part of the form where the numbers is found. And then here's Part 1. So as I said, if I'm looking at this section here, these revenue numbers tie back to Part 8. As you can see here, it notes which section is tied back in the return. If you're using a tax softwares are really good in regards to pulling this information over. Now, as we get to Part 3 of the form, in regards to Part 3 is when you got to give a brief description of your organization mission and most significant activities. I always tell my clients, just because I do work with large private foundations that do grant money to nonprofits or to tax-exempt organizations. So I always tell the clients that I'm working with, let's be clear about what our mission is, to state that. And as we get down to Part 4 of our program service accomplishments, we want to brag about how well we're doing. We want to talk about the great programs that we have, because as an organization and that is applying for grants, as you send those grant applications in, the information that they ask for is your audited financial statements, a copy of your Form 990, and they ask for very detailed information just in regards to what your programs are doing. And what they're looking at is they want to make sure, from a program perspective, is this a program that I want to invest in or, have some type of impact with in regards to if I'm going to donate my particular money. So it's extremely important that if you have milestones that you did reach just in regards to your programming, that you highlight those milestones when you're writing your narrative to Part 4 or to line 4 in Part 3. Lines 2 and 3 require the organization describing Schedule O if you have any new activities or programs, or if there's significant change to ongoing activities or programs, or if you discontinue activities or programs. So let's say you had a program that annually, from a revenue perspective, you was having $2 million in programming that was coming, and you decided to change that particular program, or you change the activities of that program. Well, if it's a significant change to that program, funders as well as the IRS are going to want to know, what did you change? Because if you change something to that program and that was the main reason why you got your tax-exempt status, then individuals are going to want to know what was really changing to that particular program, and is it going to affect your tax-exempt status? Or if you discontinued operations, that's something else that the IRS is also going to want to know. So as I note here in bold, it is important to put the IRS on notice of these changes by fully and timely reporting them on your Form 990, because the IRS no longer issues letters confirming tax-exempt status based on new activities. And then in regards to Part 3, line 4E, this is also important. So as you're looking down at Part 3, line 4E, this talks about your total program service expenses. So if we were to go to Part 9, at the bottom of Part 9, if we're looking at column A, so you got column A, column B, column C, column D. Column A is your total, column B is your program, column C is management in general, column D is fundraising. But this is saying, that last point is saying here, is in regards to column B for my program, Part 9 for expenses, that total for line 25 should tie back to what I'm showing in Part 3, line 4E. So those numbers need to relate to each other, because basically what I'm saying is, these are my program services that I have, and these are my accomplishments, and these are the expenses that go along with these programs. So that needs to tie back to Part 9 as you're splitting that out. And here's a snippet of Part 3. As we get to Part 4 is a checklist of your required schedule. So as you're going through Part 4, it's always good to think through, has anything changed within the last year of the organization when completing this Form 990? Because as you're walking through, based on how you answer these particular questions, it's going to tell you how you're going to fill out the rest of the Form 990. So for example, if you receive contributions during the year, then you're going to check that box for Schedule B. If you have any political activity, say you maybe had a lobbyist, which there's very strict rules in regards to that, but maybe you need to check that box, so then you'll probably be filling out a Schedule C. Or if we talk about Schedule D, and let's say we got an independent audit that's completed, where you may have to check that box and then go to Schedule D to complete that particular section. So depending on how you answer these particular questions is going to state on what you're going to need to do in regards to the form, in regards to other schedules within the Form 990. In regards to the Schedule O, question 38, should always be marked yes, because chances are there are some narratives there's going to be some narratives that you're going to have within the return that's going to flow over to Schedule O. As I mentioned, we just talked briefly about Part 6. It's in regards to governance and the management, and in regards to policy. So there are going to be some boxes that you're probably going to check yes there as well. So just paying close attention to that to make sure that you're checking that as yes, and then you're completing your Schedule O. In regards to Part 5, it's just regarding other IRS filings and tax compliance. So lines 1 and 2 is dealing with the Form 1096 and W-2. So this is really dealing with the number of 1099s and W-2s that you file. So this is also important to pay close attention to, because it goes back to what I mentioned earlier in regards to electronic filing. So if you got lines 1 and 2, and one of those numbers happen to be at least 250 or more, then you may be required to do the e-filing. So it's always good to pay attention to those particular lines. Also, if you're line 4A, if your organization is not required to file FinCEN Form 114, then you can answer that question as no. As I mentioned earlier, Part 6 goes over governance, management, and disclosure. So line 1A talks about your voting board members at the end of the organization's fiscal year. Now, this may not coincide with the listing in Part 7. Here's why. Because if you have board members that interchange during the year, at the end of the year, so you may have, let's say you had a total of 10 board members that were considered to be voting members at the end of the year. But you have 10, but then let's say you had 2 members that was on that board at some time during the year. So in Part 7, you may show 12 members. However, because you had 2 that left and 2 that came on to replace them, you're only going to show 10 that was voting at the end of the year. And typically what we do when we have a situation like that, we make sure we're very clear to the reader of this particular 990. So if you have board member A that left the board on 6/30/19, then we note that this individual was a board member through 6/30/19. If you have board member 2 that came on 7/1/19, then we note this board member beginning 7/1 or director beginning 7/1/19. So we make it clear that it may show 12 as board in Part 7, but really only 10 was voting members at the end of the year. So we make that very clear, and it's something that I suggest that you do as well in the event that you have more members on there, but you only have a certain number that were voting at the end of the year. Now, line 1B talks about your independent board members. And in regards to this is those independent board members that are not listed in Part 7 as receiving any compensation. They haven't received, or if they didn't receive any more than $10,000 during the year from the organization and a related organization as an independent contractor. So let's talk about those 2 points. So because it could be a little misleading. So when we say Part 7 as receiving any compensation, we're saying any compensation just in regards to being an employee of the organization. So sometimes what you see is you may have, with larger organizations, you may have a board member that sits on a board of a related organization, but they are getting paid by another organization. So I'll give it to you in a hospital context. Let's say you have a hospital who's the parent entity, and they have a clinic that we're completing a return for as well. Well, we may have a physician that is getting paid by the clinic, and the clinic has its own 501c3 status, its own tax exempt. So that particular clinic is paying that particular individual, but that physician sits on the board of the hospital. So because that individual is a board member, but is being paid by a related org, he or she would not be considered to be independent. Now, let's go to the second point. If you have an individual that is not being paid by the related organization, but sits on that board, but is providing some particular services as an independent contractor to the organization or a related organization, and it's more than $10,000 other than in their capacity as a board member, then that individual would not be independent. The next one we go to is if there any transactions that happen when you have to list the individual under Schedule L. So what does that mean? So in regards to the Schedule L is transactions that happen with interested parties, and we'll talk about that later, and it goes into about the disqualified persons. So for example, if we have an individual that is the CEO of Kiewit Corporation, and he sits on your particular board, and Kiewit did some work for your organization during the year, based on the particular services, then that individual may not be considered to be independent. It's based on the role and their leadership positions with that particular organization. In our example, it was Kiewit. The next one is not list any family member on the Schedule L as having engaged in a transaction with the organization or a related organization. So similar situation, let's say that instead of an individual being that CEO, maybe it's the individual's wife that is the CEO. Then you also have that reported transaction as well, because now it deals with the family member. So as we go to part 7 is dealing with compensation. So in regards to compensation, this is all the compensation that's listed in Section A should be reported for the amounts paid during the calendar year ending with or within the organization's Form 990 fiscal year. So as we note here in our particular example, if you are a 6/30/2020 year in and you're filing a 2019 Form 990, we're going to look at the compensation of the individuals that received comp on their W-2s that was issued for 2019. Another thing to note in regards to compensation is that in the instructions for this year, order of reporting. So before, you would end up listing your directors, and then you would have your directors, your officers, your key employees, your highest paid, and then your formers will go at the end. One of the things that changed in regards to the 2019 instructions is now your order of reporting goes from highest to lowest compensation based on the sum of columns D, E, and F to each person for each person. So now your highest paid person may be now reported first in this section versus it being maybe just your board members reported first. So typically you'll probably have your highest paid or your officers, and then you'll have your key employees, and then you'll have your board members. So it's really truly based on the compensation. So I will tell you, the first year going through this, it does look a little weird based on what it has been in prior years, but that is one of the new rules in regards to how we report on the Form 990. Part 7, Section B talks about compensation that's paid to your independent contractors, and you are to use the calendar year amounts, and you consider only service contractors, not merchandise vendors. So you exclude reimbursement of expenses unless incidental to the service or the contractor's bill does not itemize between expense reimbursement and services. You do not rely on Form 1099s. You need to also consider paid to contractors who are not issued a Form 1099. So there's something to think about there as well. So now as we talk about the core form, this is our statement of revenue. So we just need to make sure these numbers tie to other sections of the Form 990. As line 1C, you have your contributions, gifts, and grants. So here, in regards to that line 1C is just, it do not include donations to via your use of facilities or property. Line 8A is your fundraising. And then when you're thinking about your 8A, as you're completing that for fundraising events, you also have a Schedule G that you may have to complete based on the amount of income that you made or gross receipts. I believe the number is over 15,000. So if it is, and you're completing fundraising events on line 8A, and you must make sure it also ties back to Schedule G as well. And then we also have the business activity codes. So I kind of went through this section pretty fast, but there are other points on the section. So line 3 would be investments. You have miscellaneous income that starts on line 11. Line 2 is your program service income. So those are just some lines to think about as you're working through the Form 990. Going to Part 9, this is Statement of Functional Expenses. So as I mentioned earlier, column A is your total, column B is your program service expenses, column C is management general, column D is fundraising. So you must individually list expenses exceeding 10% of the total. So here's something to think about when we say that 10% of the total. So when you're looking at Part 9, and you get to sections that I believe it talks about accounting, lobbying, if you have any investment fees. If that number exceeds 10%, then you have to go to Schedule O and individually list what those expenses are. And then one thing to clarify, costs incurred to provide services to the general public to provide program services are column B, program service expenses. Costs for securing grants or contracts to the grantor are column D, fundraising expenses. So as we talk more about the core form, as I mentioned earlier, we get to Part 9. If all other expenses, line 24E, exceeds 10% total expenses, then you must itemize that in Schedule O as well. We typically don't see this because when you get to line 24, you have 24A, B, C, and D, where you're pulling out your big expense items already. So typically, when you get down to line 24E, you rarely see it exceeds 10% of total expenses. The other thing to note is if you have UBI income tax paid, that must be separately reported on line 24. The other thing is instructions for the Form 990 include definition of categories, office expenses, advertising, and promotional expenses. So how to review, make sure they agree to the amounts to your financial statement. So if you are getting an audit done, you need to make sure your numbers do match what is being reported in regards to your audited financial statements. If there are adjustments, typically those adjustments for what happened, what we call an audit to tax tie-out, where you're adjusting your particular numbers. So you need to make sure you have the proper support that if your revenue doesn't necessarily match your total revenue on your audited financial statements, then you need to note to yourself for what adjustment was made. Maybe you had some income that mistakenly got coded to expenses, and then you had to move that up. So just something to think about there. Or if you're doing a fundraising event, those expenses for fundraising may be sitting in your expenses. Well, when you do part A, what happens is you're going to move those expenses from Part 9 up to Part A to show what you really made from that fundraising event. So that would be an audit to tax adjustment that you would end up having to do. Just need to make sure you properly document it. The next part of the core form, and we won't go into detail, is the balance sheet, reconciliation and the assets, and then financial statements and reporting. So just in regards to balance sheet, very straightforward. One thing to always note, your balance sheet should always match your audited financial statements. You shouldn't have any changes to your balance sheet. That should match your audited financial statements directly. So it shouldn't be too many changes to that balance. It shouldn't be none at all, actually, but just something to note there. Your reconciliation and that assets. Typically here, if you are in some investments, you have some investment activity. And in regards to that investment activity, you may have some unrealized gains. What typically happens, this may be another adjustment that you may have in regards to just regards to your revenue from an audit perspective. Audit may include that in the revenue number. You would have to adjust that and move that to your reconciliation and assets because that unrealized gain has not been recognized yet. And there's a line in Part 11, line 5, where you would actually put that unrealized gain or loss. Now we get into the schedules. So Schedule A just goes over your public charity status and public support. So in regards to this special rule, if you're completing the Schedule A, your special rule for reporting donations on the Schedule B is greater than 5,000 or 2%. So Part 2 of the Schedule A must be completed to demonstrate that the organization meets the 170B1A6 support test. So basically, if you are a particular public charity, you have to complete this section of the Schedule A just to make sure you meet that support test. So as we know here, public charities can often qualify under multiple classifications. It does not have to mark the classification issue in its determination letter if you can qualify under a different classification, such as a 509A1 or 2, rather than a supporting organization classification. So if the organization wants IRS records to be changed to a different classification, it must file a Form 8940. So what that means is, what we typically see is we may have an organization that can qualify for more than one item that sits on the Schedule A. And in regards to the determination letter, they may have received a termination letter saying they qualify under 170B1A6, which is basically stating they're a public charity. But if there is another one that may be more favorable, then typically we would talk with our particular client and say, this is probably a more favorable one and we can meet this one as well. And then we may file the return under that particular classification and then notify the IRS of that particular change. It's not always you see this, it's rare, but in some instances it does happen. So as we get to the Schedule B and C, Schedule B is just your schedule of contributors. So as I mentioned, there is a special rule. So typically, let's say you get a lot of grants that's greater than $5,000. You get a lot of grants that's greater than $5,000, and I've seen some clients have north of 30 to 50 organizations that is more than $5,000. What they typically do is they do check a box that basically says it's the greater of 5,000 or more, or it's 2% of our total contributions. So then they do this special test to where they look at 2% of the total contributions, and if that number if whatever amount is over that to meet that particular test, they only report it over that particular amount. So to give you an example, let's say we do this test and we had 50 organizations that gave us contributions of 5,000 or more. What typically happens, let's say that we do that test and the total amount that we come to is 100,000. Well, we would only report anyone that gave more than 100,000 on the Schedule D versus showing all those numbers versus showing everyone that gave over $5,000 in regards to that. The other thing to note on the Schedule B is if you fall under Internal Revenue Code Section 527, which is a political organization filing a Form 990, and a private foundation filing a Form 990 is open to public inspection, so including names, addresses, and contributors. When we get to Schedule C, as I mentioned earlier, if it comes to political campaign and lobbying, the IRS does have really, really strict rules in regards to this. And if you're applying for grants from very large funders like private foundations, they also have very strict rules that they have to meet as well in regards to this. So you have to make sure that if you are doing this, that you did go and get you did go in and file the proper application to get approval from the IRS to do the political campaign lobbying activities. Now, if it's very minimum amounts, then 9 times out of 10 you're okay. But if you are having to fill out the Schedule C and there are some things that you may have questions on, I strongly suggest that you do talk to your tax advisor just to make sure everything is okay there. In regards to the Schedule D, this is supplemental financial statements. So Schedule D must be completed and attached to the Form 990 if you answered any of the lines from 6 through 12A on Form 990 Part 4 of the core form. So this goes back to what I mentioned earlier. As you're going through Part 4 and you're looking at the check boxes, it's just yes or no. Based on how you answer those questions is going to basically state on how you're going to have to complete what all points of Schedule D that you do have to complete. For example, if you have any donor advised funds, you would have to complete that section. The other section is if you have any endowment funds, you would have to complete that as well. But another section to think about is if you on your balance sheet and you have depreciation or you have your assets that sit on your balance sheet just for equipment or those type of assets, then if you're doing the depreciation on Schedule D Part 5, I believe Part 5 or 6, you have to show that detailed reconciliation on how you're getting to that total number that shows on your balance sheet. So there's something to think about there. The other thing is, as I just mentioned, it is Part 6, so it's lands, building, and equipment detail. And if you have any investments or other securities for a program related, that's 5% of your total assets threshold for Part 7 and 8. Then you would also have to complete those sections of the Schedule D. Other liabilities, which is again Part 10, you have to clarify in regards to FIN 48. And what FIN 48 is, it's a tax provision in regards to your audited financial statements. So if you are getting audited financial statements in regards to Statement of Financial Accounting Standards, there is a tax provision that your tax team would have to complete in regards to FIN 48. And there's a footnote that typically is in an audit that has to get carried over to this section of the Form 990 or Schedule D of the return. If you have any reconciliation, so again, if you check the box in, I believe it's 12A, if you check that box and you have to complete this particular section and you have to do the reconciliation of how you got from the audit to the Form 990 total revenue, again, this kind of goes through that audit the tax tie-up piece that I was talking about earlier, where you kind of walk through what your particular adjustments are when you're maybe moving something from expense up to revenue, or when I talked about if you have any unrealized gains that sit in that investment income that you need to move over from revenue over to net assets or the net asset reconciliation. I don't have Schedule E in here. Schedule E is if you're a higher education institution. So a lot of our higher ed clients that are not tied to a governmental entity, and then they're basically a private school, something like that, and they have to fill out this particular Form 990 and they got that approval, then there would be a Schedule E. So I didn't include the Schedule E in there because so let's talk about it quickly on from a high level perspective. In regards to Schedule F, this is grants and activities that happen outside of the U.S. So from a grant maker perspective, you should check this yes if you maintain records to substantiate the amount of the grants or other assistance of the grantee eligibility for grant assistance in regards to what you're doing overseas. So you definitely need to maintain your records for a grant maker if you're a grant maker doing some work overseas. because if you do get audited, it would be an issue if you can't substantiate those particular grants. If you have any foreign travel, line 3 is for all foreign travel needs to be reported here. So volunteer medical mission trip to Haiti, employee travels serving hospital operations in Africa. So just some examples to think about. In part 2, each grant made to entity outside the U.S. that exceeded $5,000. Part 3 is grant or assistance to individuals outside the U.S. And then part 4 is reporting of any direct foreign investments. So if you are an organization that happens to be heavily involved with alternative investments and you're receiving K-1s from those alternative investments, you definitely have to pay attention to those K-1s that you're receiving, because those K-1s may have some form of reporting. I'm not going in detail here in regards to it, but if you happen to file Form 926, Form 8865, Form 8621, anything that deals with foreign investments, then you would have to complete Part 4. Schedule G, as I mentioned earlier, in regards to Part A, Schedule G is for your fundraising and gaming activities. So if your threshold for the activities is more than $15,000 in professional fundraising expenses, then you have to complete Part 1. In regards to your fundraising events, if it's more than $15,000 in fundraising events and contributions revenue, then you have to complete Part 2. Same thing with gaming, if it's more than $15,000 in gross income. Schedule I, so we have grants and assistance in the United States. So in regards to Schedule I, if you are an organization that is giving grants out to other organizations, or maybe you're sub-granting. So what I mean by that, let's say your organization that apply in one of your programs is you're sub-granting to another grantee to run a particular program. So if you're receiving funding from a large foundation and they gave you $1 million and part of your programming is maybe after school programs, and you have other 501c3 organizations that you're going to sub-grant that money to, well, this is when you'll end up filling out the Schedule I, because you'll show who you're giving that particular funding to in regards to those grants. Again, you do have to maintain those grant records because it is an audit issue if you're not able to substantiate that. The other thing to pay close attention to, this is if you're giving more than $5,000, you would have to complete Part 2. Now, if you're giving grant and assistance to individuals that's over $5,000, then you have to complete Part 3. And then one other thing to note before I go to the next page, Part 4 is the narrative section in which you have to explain your grant program and how you make decisions on giving out those grants if you are sub-granting or giving out grants to other organizations. Schedule J is compensation information. So typically when you're working through Part 7, Schedule J, you have to fill out if you have someone that's paid more than $150,000. So typically it would be an automatic requirement for you to fill out this particular Schedule J. So if you're looking at Part 7, you have individuals that are making over that, and you come over to this particular section, you would have to fill out, carefully looking at completing question 3 and indicating how you establish the CEO's compensation. Was it the compensation committee? Is there a written contract? And you also can explain it in more detail in Part 3. Lines 4A, 4B, and 4C, this is talking about bonuses and if you have a severance or change in control payment. So that's something that you do have to pay attention to if you have individuals that's over that $150,000 and you get into those unique compensation agreements that executives do receive. Schedule L, as I mentioned earlier, is transactions with interested persons. So in regards to that, you have to report a transaction between the organization and the interested person. So that's substantial contributors and persons listed in Part 7 other than highest compensated employees. So these are your officers, your board members, and your key employees that you have to pay attention to make sure they don't meet any of the definitions of being a substantial contributor and paying attention to the relationships that they have within the organization. In regards to the Schedule O, you do have to put business and family relations between an officer, director, trustee, or key employee, or another officer, director, trustee, or key employee. Again, that's part of the core Form 990, Part 6, Question 2 that I had mentioned earlier. Schedule M, this is in regards to if you have any non-cash contributions. Typically, you have to fill out the Schedule M if you have more than $25,000 in regards to your non-cash contributions. So when you're completing this particular section, and there's very detailed just in some of the information that you would have to show in regards to your non-cash. So think about if you got a stop transfer or some type of investment shown, or maybe you received some property. This is when you would have to fill out this particular section if it's more than $25,000. Question 29 refers to contributions for which an appraisal is required. Question 30, if you answer yes, it could be an audit trigger because a donor effort to avoid a Form 8282 reporting. So if you do check that as yes, you do have to work with that particular donor to make sure that proper reporting is done. In regards to the Schedule O, all Form 990s must have a Schedule O. Again, it goes back to when you're checking in Part 4. If you're checking that line 38, that's basically stating that you're having to complete the particular Schedule O. So just remember that as you're working through the Form 990. Schedule N. This is in regards to liquidation, termination, and just dissolution or significant disposition of your assets. So again, if you have an organization that is terminating, then you have to complete this particular Schedule N. Or maybe, and I've seen this happen with other organizations, you have an organization that is liquidating its assets and transferring its assets over to another organization. Well, if they liquidate, and I believe the number is more than 25%, then you have to complete this Schedule N. The organization may still be involved, but because it liquidated its assets and moved it over to another company, you have to report that. And then in regards to if you're doing a dissolution or a merger to the final 990, again, you have to make sure you give a certified copy of those articles in regards to that final Form 990. Another thing to note too, if you are terminating, as it notes here, you got to make sure you go to the Secretary of State when you're getting that articles of dissolution. It is not an easy thing to terminate an organization. It is not easy as just closing your doors and saying we're done. There are proper things that you have to do within the state of Nebraska. You have to make sure all debts are paid in regards to terminating a particular nonprofit organization. In regards to the Schedule L, Schedule L is for related organization and unrelated partnerships. So in regards to the Schedule R, in regards to the Schedule R, Part 1 of the Schedule R is for any disregarded entities that you have. And what I mean by a disregarded entity is basically an entity that was set up under your organization that is basically treated as a department of your organization. It has its own tax ID number, but it doesn't have its own separate tax return because you set it up to be a disregarded entity, meaning that it doesn't have to file a separate tax return and all the reporting would happen under your particular organization. That would be what Part 1 of Schedule R is. Part 2 is transactions. Part 2 of it deals with any of your related organizations that are other nonprofits. You would list that in Part 2 of Schedule R. Part 3 is partnerships. Part 4 is any corporations that are related. And then in regards to partnerships, you may have there as well if you get any unrelated business income. So that's 2 things to think about when you think about that as well. In regards to Part 5, Part 5 is any transactions that you have with related organizations, and that's the section that we're covering here in regards to Part 5. So if you have any transactions with related organizations, you have to list what transactions that you are having with that particular organization. So maybe the following organization controls the organization, maybe you're a subsidiary, or maybe it's controlled by the same entity, or you're a supporting organization, but you do have to pay attention to the transactions with that related organization. And if you are the one controlling the organizations, then you would have to list the transaction, the amount. If it's over $50,000, you do have to list those amounts in Part 5 and show it. If you are the organization that is being controlled, then you just check the box on the transactions that's happening. You do not have to list the amounts. So just something to think about. And when we say control, stock corporation is over 50% ownership by voting power or value. A non-stock entity, which is tax exempt, is power to remove or replace, or to appoint, elect, or approve, or veto the appointment or election of a majority of the board members. Partnerships are ownership of more than 50% of capital or profit interest of the partnership. So just as you're thinking about that, there's something to think about there. I know I might have went a little bit fast, but I am going to stop there to see if anyone has any questions.
We haven't had anything come through that hasn't been answered yet, but again, feel free to send questions in the chat or Q&A, and I can get those to Donald. But thank you so much for everything. This was super helpful and informative. And we have been recording, so attendees, you will get the recording link as soon as we're done. So we'll give it just a minute and see if any other questions come through.
Okay.
So early on in the presentation, you mentioned something about recording organizational milestones on the 990. Can you give some examples of what those milestones might be?
So what I mean by the milestones, so if you have a particular program, and let's say your particular program is maybe talking about just in regards to, let's say you're doing after school programming. And after school programming, your goal is to reach 1,000 kids for your particular program. Let's say you happen to reach 1,250 kids, or you happen to reach 1,500. Well, because that was part of your program, and if you looked at your grant agreement when you worked with that particular foundation that funded your particular program, those are things you're going to highlight to that particular foundation when you have to give them a report at the end. In regards to the 990, you should also highlight that milestone as well, because that is showing that you are running a successful program.
Perfect, thank you. An organization is in the beginning processes of changing their name. We filed a 990N. Is there anything we need to do before we file our 990N next May? Did I hear that there was just a box we check when we file?
Yes, and the 990N is very straightforward. It's a very small form. And then if I remember the N, they may have a box you check on that N as well for changing your name, but it's a very small form. So I would say that box should be on there as well when you do the 990N.
Perfect, thank you. From a grant writer's perspective, it is sometimes helpful to see the list of gifts, grants given, and the amount. Why do some granting organizations or foundations not list their gifts?
I think it depends on in regards to that organization and what they're trying to show. In regards to listing them, I do agree. I think it's important, but I think it goes back to that particular Schedule B in regards to maybe you have so many, maybe you have 50 that gave for that particular year, and you're just checking that box to say, okay, I'm only going to show, based on this test, I'm only going to show who's over 100,000. So sometimes it's just from a burdensome perspective and reporting. I mean, I've seen 990s that can be over 100 pages. So sometimes checking that box limits the number of pages that you have in regards to that Form 990.
That makes sense. All right, we've got a few more minutes left. If there's any other questions, feel free to keep sending them in. Otherwise, we will make sure you'll get the recording by this afternoon, as well as just a quick evaluation, so we can keep making sure we're bringing trainings that meet your needs as members. Rosie, do you have anything else to add before we get going with our day?
I do not. This has been really, really helpful. Thank you so much. I enjoyed it, and I'm sure everybody else did. So thank you all, everybody, for joining us today.
Thank you.
All right.
Everybody have a good one.
Thank you, everyone. Thank you, Donald, so much for your time. And we hope everyone has a great day and hopefully a great long weekend.
All right.
Thank you.
Bye-bye.